Hi, I'm Julia Martin, co-founder of Cap Optics and host of the Revenue Pointer podcast. We're going to dive into how often should dashboards be reviewed, what makes a well-defined, well-run sales team, what do those metrics look like? And I'm really excited for today's discussion. I think there's a lot of value for everyone who's responsible for the pipeline number, wondering why it is the way it is, what can they do to improve it. And I have two really great guests with me today who know more about this than I sure do. And I'm excited to welcome Tyler and Shabam. I'll let Shabam start by introducing himself.
Hi, my name is Shabam Chabra. I am a director of RevOps at Vidyard. We are a B2B SaaS company that sells video engagement software to go-to-market teams. I've been in SalesOps, RevOps for about 5 years. I started my career in consulting, moved to BizOps, and really enjoy the go-to-market side of things. My role has largely been focused on how do you take our more tactical RevOps and SalesOps function and help it become more strategic, and increasingly focus on becoming a strategic advisor to go-to-market team leaders, whether that's a CRO or VP of sales.
Okay, great. Thanks for the intro, Shabam. Excited to have you here. And now over to Tyler.
Awesome. Thanks so much for having me. I'm excited to be here today. My name is Tyler Ingram, and I'm with a company called Screen Americas. And Screen is a global technology company that's based in Kyoto, Japan. And we have a number of different business units, all utilizing the same core technology. The unit I'm a part of is our graphic arts division. So we manufacture industrial printing equipment that we sell to companies who produce high volume commercial print, direct mail pieces, product packaging, and several other applications in addition to that. We also have a software and services layer that contributes to recurring revenue for the company in addition to that. I've been at Screen for about 4 years now and have worked across RevOps and go-to-market strategy in a number of different functions. And more recently, my role has extended into building and scaling a partner revenue motion within North and South America for the company.
Okay, awesome. So as the intros, they speak for themselves, two really established guests here today. And what we're going to be focusing on, as I mentioned, is the sales performance metrics, the qualitative and quantitative measures to evaluate how effectively a revenue team converts activity into pipeline and pipeline into closed business. So without further ado, I'll get into some of the questions. So let's start with the basics. Let's start with Tyler. What are the metrics that actually tell you whether a sales team is healthy and not just active?
Yeah, I think activity can create motion within a company, and that can kind of create the illusion of being productive a lot of times. What's more important, I would say, is focusing the right amount of time and resources on the right opportunities. So I've seen a lot of companies in the past where sales reps are just taught sell, sell, sell. That's all you need to focus on. Oftentimes convincing your prospects that they have a problem that they don't even recognize that they do today. And I've heard that a lot in recent years, actually, as kind of thought leaders share different things on LinkedIn, different podcasts that helping uncover a problem that your customer isn't even aware that they have. And while I think there's value in that, once you're already into the sales process with the company, if that's your starting point and you're going out trying to sell to any company out there and convince them that they need you, then you're starting out and making your job, I think, way too hard to begin with, versus focusing on the companies that are coming to you and saying that they have a problem and need your help solving it, essentially. And then from there, I'd say focus on deal integrity, right? Like making sure that there's executive alignment, both while you're selling to your prospect company, you want their executive team, the decision makers involved in the process. But then another piece I think people don't think about as much is cross-threading your executive team with your prospect's executive team as well. And I found that's been really helpful too. So kind of auditing each of your deals and making sure that you can check those boxes essentially.
Yeah, totally. I mean, it's perfect. Like at Cap Optics, we believe the same. Like you got to get not only the rep aligned with the senior leadership and executive, but also the director of sale at the executive level. It's easier to also get that relationship formed early on without any problems, so that if a problem does exist, those two people know each other. So couldn't agree with you there anymore. So over to you, Shabam, same question. What are the metrics that actually tell you whether a sales team is healthy and not just active?
Yeah, I think being active, certain teams focus a lot on activity. If you're a BDR or an SDR, things like number of dials you make, generally end up being the focus of the team, and that results in more pipeline being generated. But if I'm looking at a sales team, the first thing to evaluate if a team is being productive is, are they attaining the targets, however they're compensated, whatever the end goal is. So starting with activity, probably not the right starting point. Look at the overall goal of the team. Are they attaining that? Things like activity become a little bit more important if the team is not attaining the goals. In which case you start to look at pipeline. So like Tyler said, do they have quality pipeline that can result in their final attainment number being hit or the financial targets being hit? And pipeline is looking at volume of pipeline. Is there concentration in pipeline? Are they working multiple opportunities? What does your weighted pipeline look like to see, can you get to your target if you're not at attainment right now or not on path to getting to attainment? But then if you don't have a healthy pipeline either, that's when I think activity becomes the key metric to look at. If you don't have the pipeline, if you don't have the final metrics, ideally you're doing the right things that are required to get you to the pipeline, which will get you to the final metric as well. And in doing so, it's not just about volume, it's also about quality, which is where you don't only measure how much activity you do, but how does that translate into pipeline, and how does that pipeline translate into closed ones? So you're looking at whole numbers, you're looking at conversion rates to make sure you're doing the right things in the right manner to get to your goal of ARR, renewals, whatever your team's goal is.
I couldn't agree more. And I think it's a good segue to our next question. So I just want to define leading and lagging indicators for those listening that are not sure what that means. You're going to hear that probably a lot in today's discussion. So leading indicators signal future performance before the outcomes are actually locked in, where lagging indicators, an event has occurred and it's reporting on what's already happened. And so it's a good segue to our second question. Do you agree with the statement that sales teams over-index on lagging indicators at the expense of the leading ones? And if yes, can you give us an example of when you've seen this? And if no, why haven't you seen it, and what's the good practice that's prevented it from happening?
One of the examples that comes to my mind is how teams forecast. For example, if I'm a rep, I'm looking at what have I done in the past, what does my conversion look like in the past. Let me look at those indicators to determine where I will end up in this quarter and working based on that. What teams sometimes fail to do is look at leading indicators and looking at how your metrics are performing today. So it's not just a matter of what metrics are you looking at, but also what time frame are you looking at. Historicals don't always indicate where your performance will actually end up, especially in a landscape like today where things are changing quickly, budgets are adapting quickly as well. You have to be mindful of what you've seen in the past might not be reflective of what you will see in the future. So it becomes important to not just look at the right indicators, but also pick the right time frame you're looking at to measure whether you'll get to your targets or not. And when things that come to my mind is if you're looking at conversion rates from the past, that doesn't really indicate that's where you'll end up in the future. If you're looking at purely pipeline as well, you can consider that as a path to get to where you need to go, but making sure you're also looking at pipeline that's being brought in internally as well. How much are you adding to your pipeline versus what you have today to ensure you have end-to-end visibility. And that's why people talk about the bow tie structure quite a bit, where when you're looking at revenue performance, it's not just about subset of metrics, but looking at the entire funnel to make sure you've got funnel coming in, funnel converting, closing, and growing.
It's interesting with conversion because a lot of the sales teams that I talk to, I mean, we're speaking to a lot of scaling organizations. They're looking at conversion, as you mentioned, very early on, getting that discovery call converted into, more of an active pipeline and moving it across the sales process. But what often I don't see is often late stage conversion. So how many deals are lost later on in the sales cycle. So I'm wondering, Shubham, if that's something that you've seen, or have you been part of organizations where it's consistently measured conversion throughout the sales cycle, or is it just largely at the beginning?
Yeah, it's largely at the beginning. So when you think about funnel analysis, marketing generally does a really good job of looking at their conversion ratios. It's generally a part of their appetite to look at each part of the sequence, where sales teams sometimes focus on, I have something in the pipeline, how much of that is actually converting into close one, but not breaking it down into steps involved in between pipeline to close one. It's not a practice that is commonly used by companies or done on a continuous basis. But being able to look at not just are you losing deals or winning deals, but where are you losing them becomes important, because then you can start to change your customer journey and how you propose your product to prospects based on where you're losing your opportunities. You can also look at how that varies from rep to rep. So there's learnings that can happen between reps where a certain rep does a great job getting a deal to stage 3 and has high deal 3 to deal 4 loss ratio. Another one doesn't. This also gives a chance to people to learn from each other at each part of the customer journey, ideally trying to maximize conversion ratios throughout the sales funnel.
Yeah, totally. I think especially as reps move from an SDR into a BDR, they're always going to have a strong conversion up front. And it's very interesting, as you mentioned, like the benefit of tracking conversion through the whole sales cycle also helps you better understand your loss rate. So if we could go back to the question with Tyler, do you believe in the statement that sales teams over-index on lagging indicators at the expense of leading ones? What's your thought on that?
Yeah, I really do. I believe a lot of companies out there do focus more on lagging indicators over the leading indicators. And I think it's important to view conversion across the entire sales cycle, as Shabam mentioned there too. I think a lot of companies, it's natural to focus on it early in the sales cycle, and then at the very end, did we convert it to an actual sale? But many companies don't really focus on the stages in between. And then I like to think about even the steps between the steps as well. What did you do as far as next steps go, making sure that you're not leaving a call without clear, solidified next steps that the prospect is aware of, but then even internally having some in mind that you're going to have another touch point in some way before the official next step touch point, if that makes sense. So I think that's really important. But
Totally.
it is very easy for companies to focus more on the lagging indicators. It's a lot clearer of a picture, right? Like one lost, yeah, you know that. You can very easily see that whether your reps are meeting their quota, you can easily look back on that versus getting ahead of the problem, tracking other lead indicators like the deal progression, stage aging. I had a conversation a few weeks ago with someone that was really interesting. They identified that roughly 70% of their deals were stalling out in the negotiation stage. And so they were about to invest about $50,000 into negotiation training for their sales reps. So a big investment they were about to make because of that finding. And they actually had a tool similar to Gong where it was recording all of their sales reps' calls. And come to find out, instead of a negotiation problem, what they really had was an issue in their terms and conditions. There was like one line item that they thought was really important to their company, but it was a deal breaker for all of their prospects. And so they went back to their legal team, changed that one piece of information, and they saw pretty significant results with that, moving through that deal stage much faster and with a lot less friction.
Yeah, Tyler, I know you mentioned it's easy for companies to look at close won, close lost, and I think that's a fair point because winning a deal, losing a deal is very binary. People read it the same way. You can ask one rep and another rep, it's the same definition throughout. Where deal progression through stages becomes harder as well, including looking at how much time are you spending in each stage, is you need to build the foundations, either as sales ops or rev ops, to make sure you have common definitions of where your stages are, and there's a unified meaning to each of them that is understood throughout the sales team. Otherwise, stage 3, for example, might be different to one person and another person. Negotiation could mean very different to one person and another as well. Having them clearly defined to make sure everyone's putting a deal in the stage when certain criteria have been met versus your own judgment call, which can be the idea of looking the full funnel really hard when there aren't clear definitions to start. 2, there isn't a function that reviews deal movement on a continuous basis to make sure things are aligned. So you need to have clean stages, clean data, and then you can go into, let's do stage conversion level analysis to see if we can improve performance.
Absolutely. Yeah, I think that exit stage criteria is really important. And shameless plug to Cap Optics. That's why I was so interested in the tool when Julia first showed it to me. I've never really seen anything like that does that for you and kind of forces that exit stage criteria within an organization.
Thank you, Tyler. I love that. No, another benefit just to close off the leading versus lagging indicator question is also leading indicators. You can track those easier. You don't have to wait for the event to occur. We have near real-time reporting, and we're actually like even tracking activity, the time in between activity. That also helps, give a better picture to the lagging indicator. So it makes it easier and you can track more at one time as well. So we've talked a lot about, I mean, we've already heard a lot of metrics today: weighted pipeline, conversion, win-loss ratio. There's a lot of data. There's even more data when you can use AI to extract data points that you didn't even know existed. But if a sales rep has 2 minutes at the start of their day, what do you believe are the vital few metrics they should be looking at, and why those specifically?
It's very easy to start your day and focus on your next steps and working your plan, whether that's prospecting activity that you know needs to get done or working on next steps to move deals forward. But what I think a lot of people miss, and I've been guilty of this myself in previous roles as a sales rep, is focusing only on those deals that are moving forward and not really paying too much attention to the ones that I had a few meetings with. It didn't seem to be going anywhere, might be stalling out in one deal stage or another. And I always kind of view it as like viewing it in thirds, I would say, where a third of my prospects likely are going to make a decision, whether that's go with us or a competitor. And then the second third is kind of up in the air. They may or may not make a decision to make a change. And then the bottom third probably isn't going to be making any decision at all, and that's kind of the lowest priority, I would say. And so it's focusing on that middle third that isn't absolutely moving forward with a clear next step, but figuring out, okay, yeah, this one has sat in a needs analysis stage for 3 months now, and the average is only 2 weeks typically in that stage. So why is that? What can we do about that to help move that one forward? I think that's a piece that, again, a lot of reps, including myself, have missed in the past too. Another thing that's been really transformative in my life from both a business and just personal life standpoint is what I call 3 to Thrive. So before going to bed or before ending work at the end of the day, I make a list of 3 things that absolutely need to get done the next day that will move the needle the most for me. And no matter what, the very next day, I cannot go to sleep before I get those things done. And so I certainly do more than just 3 things in a day. But if you focus on the ones that you yourself deemed as most urgent, then it's just amazing the results that that can provide for you.
I love that. 3 to Thrive. Okay, Shabam, over to you. If they have 2 minutes at the start of their day, what are the vital few metrics that sales reps should be looking at, and why those specifically?
Yeah, as a sales rep, you have one primary goal in my mind, and that's to hit your target. So kick your day off or your week off with how far am I from my target, and then trying to build a plan towards how do I get to it. And to me, depending on your sales cycle, that comes down to you going through what's in your pipeline and seeing what are you committing to closing this week, or giving them probability. You've got 5 deals that can close this week, you give them probability. You're pretty much building a plan towards I am X dollars away from my attainment. How do I get there? What do I need to do this week to get there as well? So you're focusing on key deals, 3 to Thrive, your 3 top deals, or whatever that number is, that you need to commit to closing this week or this month, whatever your cadence is. This is also important because typically a sales leader will come to you and ask you what your commitments are for a weekly basis or monthly basis. So it helps you prepare yourself for that discussion, but it also makes you realize what are the core critical deals that need to move this quarter or this week. And the next thing is you're going through your task list. And the task list could be what additional meetings have I had booked in my calendar, what additional leads do I have to contact. So you're pretty much going backwards in the funnel, but you're looking at where do I sit today, what do I have in the pipeline, what do I really need to focus on this week, and then going into what other activities do I have that'll help me build a pipeline, either to get to this period's goal or next period's goal. You're pretty much going through that journey and ultimately trying to determine what do you need to focus on this week to get to your target.
So, Tyler, if I could summarize, and tell me if I'm wrong, apart from the 3 to Thrive, which that doesn't need an explanation or a re-explanation itself, but what you were saying, what you believe like the vital few are, is really like the middle stage of the deals that haven't been lost or won, they're kind of just stalled out. That's what you would definitely focus on, look at that on a day-to-day basis. Do I have that correct?
Yeah, try to focus on the deals or the opportunities that typically kind of fall through the cracks. They don't feel as urgent to you because they may not feel as urgent to the prospect, but asking yourself, what can you do to push those forward, or getting to a no faster, no as in NO. I think as a sales rep, that's very helpful to not be focusing a lot of your time and energy on a prospect that you would like to include in your pipeline because it looks good and makes you feel better about your numbers sometimes, but is it a real opportunity? Are they actually looking to buy? I think a lot of the time that's not the case. But a lot of sales reps tend to keep it in the pipeline anyways.
Yeah, we like to break things down into three buckets: volume, velocity, and quality. Quality sometimes we often hear is not tracked, but you could have a very strong pipeline and with horrible leads or opportunities that don't meet your ICP. So quality is another thing that we really like to, track on a day-to-day basis. We're showing reps quality in terms of their overall conversion. The quality of the conversations with the AI call scoring also gives a good indication of that. But I think you guys have captured it well, like the deals that are currently stalled out, as Shubham mentioned, the ones hitting your target, where are those deals located, the tasks you have to do to drive, them forward. But also, are you succeeding in the meetings? How many meetings are you having? The types of quality is one that, I think often sometimes gets overlooked that is really, really important to look at a daily basis. Okay, so you guys have been part of RevOps for a while, and RevOps is changing every day, especially with AI. Everything is AI right now, and RevOps plays a really unique role where they get to make decisions as to what AI tools should we use, how do we leverage more AI. But what separates teams that truly influence revenue outcomes versus RevOps teams that are purely reporting functions?
Yeah, I think you said it well that RevOps is changing quite a bit, and the demands on RevOps are also changing. RevOps in general should have never been a reporting function. I think that's a part of your job, but should not be the key role you play. But increasingly, RevOps has to play a role in not just supporting growth, but driving growth. And that comes in the form of really understanding what the sales process looks like, how do people within your company work today, and trying to have more of a control around what tooling and processes can we focus on to improve how teams operate today. A big part of that is also focusing on experimentation. So making sure you have experiments you can run to determine how you can improve performance in certain parts of the funnel. And that's where reporting comes in, where you measure what your funnel looks like and what your conversions look like, but you also really understand them. You identify when things are falling. You work with your leaders to come up with experiments you want to drive to get things back on track or to improve them. And that results in RevOps focusing on data and metrics to really understanding them and eventually becoming a strategic partner to the go-to-market teams you support so that you can lead projects and you can also help them determine what changes can influence your metrics and continue to measure those and supporting them in those experiments as well. So it really goes from data is definitely the foundation, and it's important for you to understand the data. And then how do you actually get involved in supporting leaders and improving those metrics and moving them forward?
Yeah, I agree, Shabam. And I'd say some of the best RevOps leaders that I've seen are really functioning as a chief of staff to the CRO or CFO, whoever they report into, and able to sit alongside them, review the data, and say, hey, if you were to pull this lever here, spend more time or investment in this one area, this is what your results likely would look like. So it's not simply just having the data and reporting for data's sake, but asking yourself, what is this telling me? What should I do next as a result of this? And I think a lot of companies are struggling with that. Like Julia mentioned, we have more data than ever and from more sources than ever. And unless you have someone internally that's able to kind of dissect that data and make inferences off of that, then it's just kind of sitting out there and not really doing anything for your organization. So I think it's those that, again, consistently ask, what is this data telling us that we should do next as a result of this? And oftentimes that'll point to how you spend your time or how your sales team or marketing or customer success team will spend their time, or where the company spends money as another resource in terms of investing in headcount. Say if you find out that if you were to hire 5 new SDRs in this specific region, it'll have this specific result in relation to revenue for that function. So yeah, I think it's really just figuring out what the data is telling you and letting the data drive your decisions.
Yeah, and this might be a little biased, but there's certain RevOps roles that end up being more growth ops focused. So you have the basic functioning to set up and the architecture you need to have to drive continuous revenue, but you also become people who help support growth in the future. A part of that is, again, digging into the data and finding trends. but also being the person who can have the difficult conversations in the room, raise a red flag where it needs to be flagged as well. Generally, leaders have good visibility into their own set of data. So if you work in marketing, you know what your marketing data looks like. If you work in sales, you know what your sales data looks like. But making sure you can look at the full funnel, but also raise a red alarm when you need to. You can have those difficult conversations when things are not lining up with where they should be, and asking those challenging questions, which I think as a RevOps leader or someone in RevOps, it's hard to do, but it definitely becomes a job to be the independent party who looks at the data versus coming with an opinion that's specific to your function itself.
Absolutely. That's honestly what I really like about RevOps is how cross-functional it is. It's working across sales, marketing, customer success, legal, product, finance, pretty much every department within your organization. And it's so easy for companies to kind of get siloed out where sales doesn't talk to marketing from that standpoint and vice versa. And I think anything that you can do to bring the organization together in that way is very beneficial. And then making sure that your data actually is able to tell the story and that it's relevant data, and data without being able to make a decision off of it is just noise, I would say.
In our first episode, we talked a lot about the terms. Each department seems to have a different definition or a different interpretation of the numbers. Mm-hmm. And I think one of the big benefits of the RevOps team that also, helps consolidate and drive decisions is actually owning the data, the metrics, and the definition of it cross-functionally. Because I have multiple discussions where marketing is saying something with interpreting the same information or a slight variant compared to the sales team. So I think the RevOps team plays a really unique role of being that kind of owner and consolidator and storyteller of the data to help drive insight, because it sounds nice in practice, but that often is not the case.
Yeah, and with AI these days as well, where we could have controlled what dashboards someone's looking at to review a particular metric, with AI and people connecting directly to solutions like Claude, it becomes increasingly important to make sure your data is well defined, you have the right fields, there's general knowledge within the organization of what to look at as well, since you have decreasing amount of control over what metrics people are looking at, how they're evaluating their performance, because instead of coming to you, they can go to it themselves, which is great because it frees up time for better work, but making sure you set the foundation for them to be able to self-serve their own function.
Okay, so this is a good segue with the mention of dashboards. So most revenue teams are drowning in dashboards. I feel like you can create a dashboard almost on demand now, but they're starving for insight. So where do you think that gap comes from, Tyler, and how do you close that gap?
Yeah, I think going back to our conversation about lagging and leading indicators, the dashboards are telling you what happened, but without insight, it's easy to sometimes look at a dashboard and see, okay, that's the total revenue. Cool, that looks good. But without something to compare it to, and without looking for, again, asking yourself that question of what should we do in the organization as a result of this data, it's really just reporting for reporting's sake. And so the insight comes from connecting the data to the root cause and constantly asking questions. And Shabam mentioned, I really like this piece about experimenting. If you have a theory on why something may be happening, why most deals are stalling in a certain stage of the sales process, create kind of a hypothesis and test it out. Make some tweaks to your processes internally and then review after 3 to 6 months. And you may find you're doing things the right way with that change, or you may find it's something different entirely. And that's what's really exciting to me, again, with RevOps, is it's just so cross-functional. It works across every department within the company. And the dashboards and reporting layer really helps to tell the story of what is actually going on, what's contributing to that, and how minor tweaks that you can make can change your results for the better.
Yeah, and to a certain extent, dashboards are great for giving people visibility into where they sit today and some high-level metrics, but it is definitely RevOps or SalesOps' focus to actually understand what's going on and become that thought partner. And that includes if you see metrics underperforming, that's something anyone can see on a dashboard, which is great. But then ideally, there's someone diving into why a certain metric is dropped and digging in deeper and deeper and peeling the layers to understand what's changing, how do we get back on track, how do we improve performance becomes more important as well. And that's why going back to the topic of like RevOps and how the role is changing, and how do you go away from reporting, it is to become the person or the team that can go in and dig into metrics and provide insights. It's also the more interesting part of the job. Yes, data is readily available, but you definitely need people who will dig into things when they need to, either because there's certain risk or you're doing QBRs and you're just looking at the entire set of the entire funnel to see where you did better, where you did worse, trying to identify those trends and then diving into them deeper or coming up with experiments you can do to influence change.
Yeah, I agree. I also think some organizations that we speak to, especially if they're early on in their sales reporting journey, if they're scaling or they're still doing founder-led sales, is the connectivity and the correlation and causation is not well understood, or and that's a big part of there's build me another dashboard on pipeline. I need to break that down further. Like, you can actually have less with more correlation and understanding. So if your conversion is red, it could be because you didn't meet your ICP. You don't have a well-defined ICP. It could be based on call analysis that the reps, not answering questions or not asking the right questions. I think the correlation is often what has people drowning in dashboards. There's not enough connective tissue between each of the sales metrics. So that's something personally I've seen. Not enough time spent really saying this could cause this, or it could be because of this. And sometimes it's not just one metric, it could be a combination of them. But that's something that we often see when speaking, especially to scaling organizations as they're trying to build out their sales performance and reporting, is there's not enough time spent on the interconnectivity of data.
Something that I'm starting to do recently is when I start the week on Mondays, I will dive into how the company is doing and look at metrics not just in one team but across the entire board. So I'm looking at marketing performance, sales performance, post-sales performance to get an idea of how the business did in the last week. It's been helpful because it helps me answer questions that might come up during the week as well. But again, it goes back to gives us an idea of where do we need to dive in further beyond what a sales leader or marketing leader would typically do, and becoming the layer that provides those insights to senior leadership, but also people within certain functions.
I like that. That's a really good idea, Shabam.
Okay, so we have a lot of founders who listen to this podcast, and to end kind of the questions for today, if a founder came up to you and said their pipeline looks strong, but they're still missing the number, which is very common, what are the first things you would tell them to look at?
Yeah, I think there's a common saying that pipeline is king, and the focus is if you have the pipeline, you will get to your end metrics. But if you're missing a number and you still have strong pipeline, to me it indicates, one, your pipeline's not converting properly. Two, you don't have common definitions of what's considered pipeline. You can have a rep that puts a deal into pipeline when there's a very early sign of a potential conversation. You can have other reps who put deals in the pipeline when there's a higher probability of winning, but making sure that the team's aligned on what is considered to be pipeline becomes very important. And the best way you see if you have a problem or not is you're looking at your pipeline conversion rates, but also looking at how do they vary from rep to rep. And if you see significant difference between reps, you've got a definition problem. The second thing I would look at is not conversion, but how much is my pipeline getting pushed out? Typically, we'll see that deals get pushed out quarter over quarter, and it continues to make your current pipeline look strong. But as deals get pushed, it has a lower likelihood of closing. So how long the deal has been open for can also dictate the quality of your pipeline. And this is why you have things like pipeline calls where you go into diving into quality of pipeline and making sure it's clean versus looking at high pipeline, assuming you have a good probability of attaining your goals, but not really going into the details to determine if that's going to turn true or not.
Yeah, I completely agree with what Shabam said. I'd say pipeline doesn't matter if it's not real pipeline. And again, I think I mentioned before, it's easy to get excited about seeing your total pipeline number and wanting to keep some opportunities in there to kind of fluff it up a little bit, even when it might not be completely real opportunity. And I can't think of any sales rep that is not guilty of that. Again, myself included in the past too. But if you're truly being real with yourself on what's actually going to close, what's going to get the company paid, what's going to get you paid as a sales rep, I think you have to be really honest with yourself and start auditing the deal integrity, right? So kind of what Shabam mentioned, are the stage definitions consistent across the board? throughout the organization? Is the exit criteria in there, as we talked about before? Is it an ICP prospect? Is it truly someone within your target market, or is it, again, just a random company that you think might be able to buy and try to convince them that they have a need for what you're selling?
Like with pipeline as well, Tyler said that you can have as much pipeline as you want. In the past, we rolled out SPIFs, which are short-term incentives for teams to go build pipeline. And the idea is stronger your pipeline, better your performance in this quarter, next quarter. But you quickly see pipeline's really easy to build. To a certain extent, you can price a deal at $10,000, $20,000, or you can price it at $80,000, and you'll just see the values drop as the deal progresses. So pipeline is definitely an important part of the picture and worth keeping an eye on. But quality of pipeline, like both of you mentioned, becomes increasingly important because pipeline is something you can easily inflate if you wanted to, but as long as the conversion ratio stays the same, as long as your time to close stays the same, strong pipeline means strong performance. But if you see those drop, your pipeline is definitely inflated and you need to dig in deeper.
Yeah, I mean, for me, it comes down to, as I mentioned, volume, velocity, and quality. Volume, where is that pipeline? I think we spoke about weighted pipeline before, but there is a big difference between having a huge pipeline very early on in the sales cycle versus having it later on. Mm-hmm. And so I think it's not sufficient enough to just look at your overall pipeline. You have to extrapolate it down into where it is in the sales process and which stage it's at. Velocity, like the conversion of the accounts through the sales cycle. If your pipeline is just stalling and it hasn't progressed, then it's not likely going to close, or you have to look in and dive into why it's stalled. And then quality, as you mentioned, is this really within your ICP? Especially, I think, for founders, I've been guilty of it as well. You want to chase after everything to get deals and, build those first couple clients, and that you got to do what you got to do early on. But as you scale and you really try to have sustainable growth, you have to make sure that your pipeline has it meets your ICP qualification, because you could have everyone wanting to buy your product, but if they're not ultimately the right people for your product, it doesn't matter. Mm-hmm. And you'd rather have less pipeline than more in that. So it comes down to volume, velocity, and quality for me when looking at your pipeline.
I think quality metrics also vary based on what stage your company's in. If you're a relatively new company or you're scaling, I think ICP is important, but it's also important to be able to expand your ICP when you need to. Sometimes you can't really well define who's going to use your product. So that's where the whole idea of experimentation comes in, where you see some early signals of people from different industries, different users coming into your pipeline. You decide to expand your ICP to see how that performs as well. So it does become important to see like what type of a company you are, what stage are you in, how open are you to experimentation, which will dictate how do you evaluate the quality of your pipeline and how firm are you with it as well.
One other thing that came to mind to me in terms of pipeline often being inflated within an organization is internal structure and what leadership is wanting for the sales reps to do and how they move through the sales process with their prospects. So I've worked at a company in the past that said, no, we will never show a prospect pricing until they've moved through every single deal stage. They've done the demo, they've gone through needs analysis, we have all the buy-in, quote unquote, otherwise. And so you would, as a sales rep then, you find a new opportunity, get them into process, they ask the question, which inevitably is going to be asked, how much is this going to cost? And we were instructed not even to really give a range too much. I just think about me personally, if I need to buy new windows for my house, it's helpful for me to know from the get-go, am I talking $5,000 or $50,000? Because if it's 50, I might not be in the market. And I think that happens a lot. And I saw that in this industry that I was in at the time.
Yeah, and a weighted pipeline kind of addresses that problem already, where if you're presenting your prices at the last stage of a deal cycle, typically conversion ratios at the last stage are quite high. In this case, you'll see a big drop-off, and ideally a weighted pipeline gives you an idea of that delta in between. But I do agree, like sales stages do come into it. If you are holding off on a key criteria that results in people dropping them off, if you're doing like debt loss analysis to see why people are not purchasing a product, if it happens to be pricing and that's the last thing you present, there's probably something to consider there. And from evaluating where your business's perspective, a weighted pipeline takes care of that, because you see that drop off and your weighted pipeline is lower, What it doesn't do is your sales rep spending time with individuals that never had the intent to buy, and you could have figured that out very early on and you spent your time on the right opportunities versus let's not share certain parts of our business like pricing and find out that you lose deals because of pricing later on when you've already invested hours or days on a particular opportunity.
Yeah, I think it also depends on, what you're selling. Sometimes it's easy to give a total price. Sometimes you don't know what price to give if you haven't fully understood the problem and, what the objectives and what the parameters of that solution are. But I think it really depends on kind of what industry and what product you're selling.
For sure. Yeah, it's very true.
And not every product is the same, right? You can be selling one product in the same industry, and your competitor might be selling a very similar product, but the value delivered might vary. And when things like pricing come up early on in a conversation, if you're a company that contributes higher value than your competitor, you're more likely to lose if you introduce pricing early on because you never got a chance to demonstrate your value, but you lost an opportunity purely because of pricing.
That's true.
Okay, I have one more question to end it off. How often do you think sales teams, so BDR, SDRs, VPs, AEs, you name it, should be reviewing their performance data? And does that change based on what the numbers say, or do you think it should be consistently the same time period, regardless of if the numbers are red or green?
Yeah, I think it really, for that, it depends on the product and the industry and the length of the sales cycle. For me, currently at Screen, we work on, I'd say, anywhere from 1 to 2 year long sales cycles. So if we were to do a weekly review, it wouldn't really necessarily make sense. Whereas within other industries, that would be the only way to do it, is to review weekly or even monthly. First of all, yeah, it depends on your company and the length of the sales cycle and all of that. But I think monthly is a good start in a lot of organizations in a lot of different industries. Early on, I think like early into the month or early into the quarter, whatever reporting cycle, you focus more so on trends and identifying what's going on, kind of figuring out how to manage the trends that way. But then later into the month or later into the quarter, you're really focused on managing deals and actually pushing the revenue through to the organization. So that's where I would say it changes as time goes on, as you get later into the reporting cycle.
Yeah, I would agree with that. It really varies on company to company. If you're transactional sales, reviewing it more often can result in better insights and finding issues a lot quicker. If you're enterprise sales and you review data on a daily basis, weekly basis, not a lot will change on a week by week basis. But then there's who's reviewing the data as well. If you're a rep, you're typically not going that deep into the data on a continuous basis, but you have functions like RevOps that should probably dive into it more often. Because the idea is let's go find systemic problems or systemic issues, whereas a rep is just looking at their performance, which will typically not change that often. And even if it changes on a week by week basis, there are other factors outside of your control that can contribute to that change. So I would say if you're someone who needs to find systemic issues and systemic patterns, review it more often, stay close to it. If you're an IC, probably not as much because one, the data might not change that much on a week by week basis. Secondly, just because something drops 1 week doesn't mean it's a pattern. So you need to give it a longer period of time to review there's an issue.
Yeah, I kind of think it depends on the metric, which is kind of cheating. But there's some metrics that you can look at on a daily basis, especially on the outbound side, number of calls, appointments booked. Those ones are easier to track at a daily, weekly level. Obviously, you can't look at every single number on a day-to-day basis, as you both said. But I do think that there's some metrics that you can track quite frequently. We have something called activity index as well, which is how much time have you spent in between, like when was the last time you touched that account and how much time has passed over all of your accounts. I think some of the activity, especially early on in your sales cycle, you can track frequently and often and review. And those are also very binary. Did you make your calls? Did you not? Those are easy to track on a daily basis. But I agree with both of you that, there's some metrics that are not well suited to your weighted pipeline. The day-to-day changes not something you need to, stress and analyze over, but that should be looked at maybe weekly or monthly, depending on the organization. I think sales cycle comes into it as well, but I think there's some benefit to looking at some metrics on a very granular level very often. Just depends on the organization, the sales cycle, and what those daily activities look like.
Actually, I was at an event this week, and a lot of people in revenue operations and go-to-market operations talk about how they feel like they're really behind and the world's changing very quickly, and you see people doing all these things on LinkedIn. And I think it's a time where we definitely have to be agile as a function, moving beyond reporting and systems that we're used to. But it's also important to realize to focus on the problems that your company has and focus on the priorities of your companies versus what you're seeing out there in the market. A lot that's out there, some things work, some things don't work well, some things are true, some are not true. So finding the balance between continuing to evolve and adapting as the market changes, but also recognizing what's important to your business versus chasing particular fads that might be talked about in social media and LinkedIn.
I like that a lot, Shabam. And I think this day and age with AI and everything coming out and growing, changing so rapidly, it can be a little overwhelming at times. And I think the networking piece and talking to other operators who are in similar roles as you are, or maybe even a little higher up or an adjacent role to you, can be really helpful to just learn how other organizations are using and leveraging AI. And it won't always fit within your company as well, but sometimes you might come away with one new idea that you can implement, and that can make a big difference. And on that note, I just recently, a few months ago, joined Pavilion, which is a peer group for go-to-market and RevOps leaders. And that's been very, very valuable to me, is the networking through that and learning about what different people are seeing in their organizations. And I just nerd out on this stuff, so I listen to like RevOps podcasts and all that all the time too. So for anyone listening, if any of this stuff resonates to you, would love to chat and compare notes, so feel free to reach out.
Thank you so much for joining me today, Tyler and Shabam. I really enjoyed the conversation and hearing both of your perspectives. For everyone listening, please stay tuned for the next episode of the Revenue Pointer podcast. Have a great day and happy selling.